You have probably heard this all over the trading space. Every strategy works. Well, yeah, every trading strategy works. Whether it's ICT, SMC, ICC, support and resistance, supply and demand, every trading strategy works as long as you have back tested it, forward tested it, and also obtained real results with live trading. Every trading strategy works to every person as long as you are committed to learn and also improve by your mistakes. Now, I, as a price action trader who uses support and resistance, tried out one of the most anticipated trading strategies, which is SMC. In this video, I'm going to be breaking down to you a trade that I took entirely based off of SMC and also some fundamentals from ICT. Now, follow me as I guide you through this trading video. Let's go. Welcome back, guys. Now here we are on gold 15 minutes time frame. I decided to start from the 15 minutes time frame to outline the trend and also see what gold was doing on this higher time frame. Now you can also start from the 4 hour, 1 hour, but you can clearly see off the 15 minutes time frame that gold was under a big downtrend. Starting from when I published my latest video, the previous video, I showed you that gold could be on the verge of selling, as we have seen many traders, many investors cashing out their gains, and also I started to see some technical analysis showing me that gold could be heading to a selling pressure. Now this is what I was seeing on the 15 minutes time frame. Here on gold, I noticed that gold had made this break of structure right here, which induced that it told me that gold was looking for more sales as of the previous time. It was 28th October. It was actually today, but in the Asian session, this is when I took this trade, and as you can see also here, we had some break of this resistance if I would be using price action, because normally I would be looking for price to retest this resistance. It was support before, but then got broken, and I would be looking for price to retest in this zone here to be looking for sales. But I was going to be using SMC and ICT for this time, so I wasn't paying more attention to this. I was considering it as a break of structure. So then, in this previous time, I was looking for some key concepts to base on for taking more sales. First of all, I had seen that gold had broken this structure here, broken this low right here, going deeper, then suggesting that gold could be able to make another lower low, surpassing this break of this swing low down here. It was a lower low, and also it was some kind of liquidity. So I was trying to be looking for a potential for price to return to anywhere around here, for price to keep on going lower. In my first analysis, I spotted something. I saw that price had recently swept liquidity above these highs, as you can see here. The line is a bit too thick, but you can see that price recently swept liquidity above here. We had these wicks centered around this kind of a high, but it was a fractal high, but then price made a fractal low and then came back and mitigated here, sweeping liquidity above these wicks. Then price came lower, sweeping, making another kind of lower low here. Let me just highlight it for you. Price made somewhat of a break of structure here. So then I was looking for price to come back to this order block. As you can see, we had this extreme order block on the 15 minutes time frame, which was a high probability order block because mainly we had some imbalance right here. This was a fair value gap which price had to come back to mitigate this imbalance and also tap into this order block for me to get some more sales coming in according to SMC, as I was using SMC by then. But I also suggested that price could not be able to retest or mitigate this order block here, mainly due to we had some kind of breaker around here. As you can see, according to ICT, when there is a breaker before another block, price normally mitigates the breaker and goes lower before actually tapping into this order block. So I said it's worth giving a try, so I was going for this breaker because it also had some kind of imbalance right here. And I also knew that normally when there is a breaker, price cannot usually mitigate this order block around here. So I was sticking to the plan of taking the trade from this breaker around here. So I also needed to first see different kinds of liquidity the price could want to feed on before going to my also sell-side liquidity down here, breaking structure and making a newer lower low. So I was able to see that we had some kinds of liquidity here, and according to SMC and ICT, the major moving factor for price is the presence of liquidity. So price needed liquidity to sweep before going to the next liquidity, and then I had underlined here it would be a break of structure but also some sell-side liquidity. You can clearly see that we had some kind of sell-side liquidity down here, as I have marked it up for you, and we also had some bunch of highs around here which I considered as some buy-side liquidity the price could want to feed on before going lower. Now, as we have confirmed that we were in a selling momentum or a bearish market, I suggested, and I clearly know that this is what ICT traders base on, I suggested that price would have to sweep buy-side liquidity, mitigating an order block, fair value gap, or a breaker before going to the sell-side liquidity. So this is the same thing that I did right here. I outlined sell-side liquidity and also these kinds of fractal highs, as you can see here. We had these pairs of liquidity resting above these highs. Now we also had some kind of trendline liquidity here. As you can see, we have a tiny bit of a trend line which I suggested the price could have to go above and sweep liquidity above these highs and also this trend line liquidity, mitigating this order block breaker and also I would have to wait for price action entries on this order block or breaker block. I'm not familiar with these terms. Then also wait for confirmation to be able to stick to this lower sell side liquidity. So as you have seen here, this was my setup just a few minutes before we had this trade taken, and I could suggest that every trading strategy you're about to take, you should have back tested it many times and also proven by a series of journal trades that you have taken to be able to make sure that you are confident and also that that trading strategy is profitable for you. So now I'm gonna be showing you from the lower time frames how I took this trade in real time and how I was able to let price roll to this lower sell side liquidity down here. So let's move to the I went deeper to the 1 minute time frame, and as you can see, these are the levels that I had outlined on the 15 minutes time frame. As you can see, this was the order block, but it is now refined as we have moved to lower time frames, and this was the breaker that I had outlined. So I needed more refined zones to be able to have clarity of what I was looking for. Now I somewhat erased some levels, but let me just make it visible for you again. Let's zoom in. As you can see here, this was our first liquidity, our first buy side liquidity. The price had to sweep, and consecutive to it we had this also buy side liquidity resting above this high here, and we also had somewhat of some trend line liquidity which I had shown you on the 15 minutes time frame, but now it was resting about here. We had somewhat of a trend line around here. So let me just zoom out for you to see the whole concept of the thing, the whole setup. So now this is somehow visible to you. We had this order block, but we are disregarding it because we have an breaker block here. Now we had this higher high here, showing us that the market was indeed retracing back and about to sweep these kinds of liquidity. So I needed a more refined entry zone. So I headed right into my breaker block here, looking for a kind of order block with imbalance to be the one to consider instead of taking this huge breaker block, because if I had to take this breaker block as an entry, I would have to get a lower size of a risk to reward ratio, because as you can see, if I would have to wait for price to come to here and place my stop loss at the extreme end of the breaker block, I would have to get a 1 to 3, a 1 to 4 risk to reward ratio. It would be fine, but I needed somewhat of a huge trading risk to reward ratio. So then I headed into this for a more refined order block. So this is the order block that I identified. As you can see here, we had this order block, and I'm gonna show you the narration behind this order block. So we had this previous lower low here, and price came here, and then this order block here was the reason why price swept down and also made a new lower low down here, and then it was swept again, and a series of lower lows was formed after this due to this order block here. So I consider the price would have to come back to this level once again. It had been mitigated here, but because of these liquidities that I had shown you, I was confident that price would have to return to this order block once more to be able to sell even lower. So the rest was going to be purely patience for the price to come back to this order block here and mitigate it for me to consider selling gold back to this lower low here. It was supposed to be a huge trade, as you can see, because we had a very large range of pips from here to here, and this is the beauty of SMC and ICT. It provides you with a huge risk to reward ratio, but the choice is yours to make if you are going to with ICT, SMC, or price action. So let's play price to see what happened. As you can see, price was heading towards this liquidity, as we have seen, and first of all, the first liquidity was swept around here. So this was the first liquidity sweep we had, and price was going to head for this high. As you can see, it would have tricked so many sellers to enter at this level, because we had this liquidity sweep here and we had some signs that price was going to go lower, and many sellers would have to place their orders here and their stop losses above this wick here. And guess what, we had a higher time frame narration. The price has to come back to this level, which was a breaker, but we also identified an order block here, so price would have to come back to this level. We would not have to be tricked like these early sellers around here. As you can see, price came directly to this high and sweeping the second liquidity about here. So let's just get rid of this, and plus we had this trendline liquidity also swept. So let me just erase this. As you can see, we headed back into our order block. This is the same rectangle that I used to show you the order block, refined order block that I identified in the 1 minute time frame. As you can see here, it was the order block, the same order block that caused this break of structure. So price had finally swept all these buy side liquidities and headed straight to our order block. So the rest, I'm not a trader who takes impulsive entries at the mitigation of an order block, so I had to wait for price action to show me that we had sellers coming in the market. As you can see, we could also get some liquidity sweep around this week. As you can see, we had this mitigation and we also had some price action showing me that sellers indeed have entered this market. So you can see this somewhat of an engulfing candle here. It showed me that price is more likely to be moving to the extreme low, and now after this bearish engulfing candle, I suspected that sellers have indeed came into this market, and I was ready to short from here. I placed my stop loss right at the break of this order block around here, and then I was going to target different levels of liquidity. Now if you would see here, we had our first level right around here. I was going to be taking partials from this level, so let me just mark it up for you. This was my first take profit level, and I will let the rest ride to this level right here. And so we would have a 1:5 risk to reward ratio. It was about the same as the 1:4 risk to reward ratio we had before, but this one is more refined, because if we would have to let price mitigate the breaker from here and place the stop loss from here, I would not have more confluences that price was indeed going to sell. So I had to wait for a refined order block and price action to show me the price was ready to go lower. So let me just play price for you to see what really happened. Alright, so we were in the trade right now, and as you can see, price was somehow consolidating around here. We were still in drawdown, but then price managed to go down. It went lower as more sellers were getting inside the market. Price came back to our entry but was not able to cross above it. As you can see, it was some kind of consolidation for a while, and we managed to have that break of structure. So this is the same thing that I'm talking about, why you have to inspect what the price is doing. As you can see here, we had some kind of an order block, and price retested this order block right around here, and also had some bearish momentum to be able to break this structure around here. So price broke this structure around here, closing under, marking up price going even lower, and we in a few minutes would be hitting our take profit. And as you can see here, we crossed our first take profit level as price closed under this line. So I took some pressures from this level. As price broke this structure, I was able to correlate that price is willing to go lower. So I risked more by letting price go deeper. I was able to take off my risk and put my stop loss to break even around here, and I was going to let the rest ride the line. Let me just adjust this for you to see clearly the trade. Let's keep playing price to see what happened. As you can see, as price was going deeper, he wasn't showing any signs of making any market shift to go even higher. So it happened as a series of lower lows and lower highs, and entered some phase of consolidation around here. Some kind of consolidations happened around this level, but I was okay because I had taken off some partials and let the rest ride. If we would be able to break this structure here, I would be confident that price is going to go straight to this liquidity, sell side liquidity down here. So I had to wait for price to break this low here to confirm that bears are still present in the market and keep on holding to the sell side liquidity. And just in a few minutes I saw this great sell-off here, and we actually hit full take profit. Now this was a very great trade, as I was inspecting everything and trying to learn about this price action strategy of SMC, and as you can see, it was a very great trade, and I clearly enjoyed every market movement that happened in this period that I was waiting for this trade. Now if you like this video, don't forget to like, share and subscribe, as I am going to be sending even more trade breakdowns after this video, so stay in touch.